Welcome to the Opportunity Podcast, where entrepreneurs come to learn from real buyers, sellers, and industry experts on the lesser-known growth opportunities to build their online business empires. We'll uncover tactics veteran online business entrepreneurs have used to build, buy, flip, and sell their way towards personal wealth. Sit back, grab a coffee, and get ready to uncover hidden growth secrets. The Opportunity Podcast starts now.
Hello, everyone. Welcome back to another episode of The Opportunity, where we talk to entrepreneurs, investors, and, well, really fascinating people in the business community. I will be your new host, Greg Elfrink. You probably were expecting Sarah, but I am taking over the podcast from here. I talk a little bit about why that is at the start of this episode, but this episode is awesome. It's going to be fantastic for you, especially if you are an investor looking to get involved in the online business world, because today I am talking to Mike Vranjkovic, a very good friend of mine. I've been working with him for over half a decade at Empire Flippers through a variety of different projects. We get a little bit into that history together today, but the really exciting thing here that we talk about a little bit later on in this podcast is that EF Capital is raising outside money that could be you if you're an accredited investor, to go to their next level of growth. We're going to be talking about why that is, why they're spinning off from Empire Flippers, and the hidden benefits that is going to give them to grow even bigger and faster. So if you're as excited as I am about this, then get ready, because this is an awesome episode. I don't want to steal too much of Mike's thunder, and since this is my first episode, I kind of already recorded an intro anyways, so you'll get a little bit of an overview there. If you like this episode, make sure you follow, like, subscribe, and leave a review for this podcast. I'll see you at the end of this interview with Mike. Hello, everyone, and welcome back to another episode of The Opportunity. You might notice the voice is a little bit different this time around, and that's because it's me. It's Greg Elfrink, the Director of Marketing at Empire Flippers, doing my first ever episode as the host of The Opportunity. Now, Sarah still has a few episodes that she will be publishing, so you'll hear her again. But as we mentioned on the episode with her and me, she is going off to start her own entrepreneurial adventure. So I will be your new host for the foreseeable future. We might get someone else in here if I make too many mistakes, but we'll see how it goes. So today I have a very cool guest. I have Mike Vranjkovic. He is one of the founders for EFC, Empire Flippers Capital, a very cool sister company of ours that is helping investors and entrepreneurs connect for the very first time ever in a more passive and efficient way in our industry. So investors can buy or own, rather, fractional equity into these different online businesses such as Amazon FBA and content. So Mike and I, we've been good friends for a long time. We've been working together for over half a decade. So it's awesome that my first episode gets to be with basically an old friend of mine. So Mike, welcome to the show. Welcome to The Opportunity.
Thank you for having me, Greg. Really excited to be on the Opportunity Podcast.
Make sure you give a 5-star review, specifically when this episode comes out, to help my ego.
Let's do it.
Perfect. My bad. Cool. So why don't you introduce yourself a little bit to our audience? You know, some people might be familiar with you and EF Capital, but some listeners probably aren't. So go ahead, introduce yourself to us and where you are in the world right now.
Sure. My name is Mike Vranjkovic. I'm one of the co-founders of EF Capital. I originally joined Empire Flippers back in 2014, held a few different roles with the company across various different departments, everything from vetting to sales, even migrations. After a few years, I left Empire Flippers to start my own thing, created a Amazon FBA business, managed that for a few years, and came back to Empire Flippers. And we launched EF Capital together along with Justin and Joe. We co-founded EF Capital to allow investors to passively invest in online businesses. In terms of where I am in the world right now, I am in Mexico City. I just got here 2 weeks ago after spending some time in Asia, and I'll be here for the next 2 to 3 months before heading back to Asia for a team meetup.
Nice. I like Mexico City, man. I was there for the DC event, the Dynamite Circle event there. One thing I don't like about Mexico City is how high the altitude is. It really makes breathing tough.
Yeah, I mean, it definitely takes some time to get used to. I remember that DC Mexico event. I definitely got a little altitude sickness. I don't think I actually got sick, but it definitely made sleeping a little harder. It just takes a while to get used to. But now that I've been here in 2 weeks, I don't feel it anymore. I do wish it was a little warmer. Well, in fairness, I wasn't running marathons at sea level either, so I can't blame Mexico City for that.
Awesome. So you talked a bit about your career, and it's cool because I've gotten to see a lot of these different phases of your own work, as you grew and as I grew with the company. And so it's been really interesting to watch as you are going out and building EFC. And now, as we'll get to it in this podcast, spreading your wings and even flying beyond Empire Flippers in some ways. So my first question for you is, in your opinion, over these last few years, with everything you've seen, how has the online business industry evolved and grown over the last few years? Like, what's different today, whether it's a good thing or a bad thing, versus when you first began all those years ago?
I mean, it's definitely matured, which I think is a good thing. It's a lot less like the Wild West. Still is a little bit like the Wild West, like it was back in the days, but it's matured. It's a little bit more organized. I mean, one of the big things that jumps to mind or comes to mind are the multiples. Back in 2014, we were known as the 20x guys, the guys selling websites for 20x monthly profits. And at the time that was high. Most other websites were selling for something like 15x on other platforms. And then over the years, the multiples have increased a lot. Currently it's probably roughly double of that, in some cases even higher. So the industry has matured. I think we've received more interest. We've received more investor interest, including institutional investor interest. So that's really exciting to see.
Yeah, I remember the 20X days because when I first came on board, I remember you guys talking about them because when I came on board, we were already above the 20X, but we were still known as the 20X people. Like, that's the only thing, like everything's 20X, even though it was not the case when I first joined, which is a great sign of sometimes the market takes a while to catch up to the new reality of what's going on. Nowadays, it's quite interesting. A lot of people think we don't even sell, like sub 100K businesses. Like EF only does the big deals. And when I first began, EF only does the small deals. It seems like you can never win. But
That's true.
I agree with what you had to say on the maturity of the market. Like, just a quick aside, like, what do you think is driving that maturity? Is it just like more people know about the businesses, or is there something else that you think is kind of the engine behind that?
Well, I think it's just more transactional volume. That's probably a big part. Back in the days, it was just a small niche that a few people that knew how to build websites, how to run online businesses, that where they bought and sold online businesses. I think it's slowly becoming more mainstream. And as a result of the high transaction volume, both on individual businesses being sold and total amount of businesses being sold, that leads to maturity, a more mature marketplace.
Yeah, for sure. I still remember our original customer was, your typical digital nomad. And then fast forward years later, sitting in Austin, speaking with family offices and regularly now talking to private equity people on our side. So it's been crazy to watch the growth. Speaking of that growth, since EFC, and perhaps we should take a step back here real quick. I gave a little bit of an intro on what EFC is, but perhaps you should explain it in your own words. Like, describe Empire Flippers Capital to me.
Sure. So EF Capital is a investment platforms that matches up passive investors and experienced online business operators. So from an investor perspective, it allows you to passively invest in online businesses without having the necessary skill set or time to run them. It allows you to create a diversified portfolio by owning fractional shares in many different online businesses.
Awesome. So that leads into my next question. So if an investor is looking to grow their portfolio with EFC, why should they choose to invest in online businesses over other assets like, say, stocks or real estate? Like, what are the benefits here of buying one of these businesses, or rather investing in one of these businesses?
One of the biggest benefits here is the high returns that online businesses can provide. So like we talked about earlier, when we were talking about multiples, we were talking about monthly multiples. If you were talking about any other asset class like stocks, you would be talking about annual multiples. So if you look at a average multiple of something like 3x annual or 36 monthly, if you were to buy a business priced at 36 monthly and you just buy that business with 100% cash, zero financing, and the business doesn't go up, it doesn't go down, it just makes the same amount of money that it makes, you would receive something close to 33% annual cash on cash returns, which is a really, really high return compared to stocks, compared to real estate, compared to pretty much any other investment class. Now, one of the reasons it's such a high return because not everybody can run these online businesses. Owning one online business, there are single points of failure and things like that.
Yeah, absolutely agree with you. There is a lot of risk in there, but the reward is also so much higher. Like the things you can do, even with an affiliate site versus like a single family home rental, right? An SFR, like you can't do conversion rate optimization to increase your rental prices by double overnight, right? Like that's not like something you could do with a single family home. Well, I guess you could try, but there's a very good chance it will not work. Your tenant would probably be really pissed. But I agree with all of that. I think the rewards of investing into online business far outweigh the risk in terms of like the kind of money you're putting down here, especially when you compare it to the same kind of money you put down in stocks and real estate for much more marginal return.
Just a quick little comment. Like one of the really exciting things I think right now about online businesses is that they're priced and based on cash flow. So I definitely don't have a crystal ball. I have no idea what's going to happen with the economy. But if we go into a downturn or a recessionary type of environment, I think it would be good to hold cash flowing assets versus things that were a good investment because they've gone up, over the last few years.
Absolutely. I tell entrepreneurs all the time that like in the game of business, game of chess, right? Like if business was chess, your king would be your profit, right? You got to protect it at all points. But the queen is your liquidity. And in a lot of ways, your liquidity is defined by how much cash flow you have, right? If it's all locked up in stocks and real estate, your liquidity could be quite low, especially in real estate, right? Depending on the market. But these kind of businesses, as you said, they spit out routine monthly cash flow every single week, which is amazing. There's no other investment really like it. And of course, you can use that cash flow to go into stocks and real estate. A lot of our customers at Empire Flippers has done that, or they'll buy businesses from us, scale it up, and then use all that increased cash flow, then go buy some stocks and real estate and probably more businesses. So in your opinion, like I've been around long enough to see this idea of EF Capital come around a few different times. And I think this is likely the best rendition of it. And I've been really impressed with what you and your team have been doing. So tell me a bit about the gaps and barriers. You mentioned one, like, it's hard for investors to enter in where they buy these businesses and actually operate it themselves. But what are some of the other gaps and barriers that inspired EF Capital's creation in the first place?
The whole reason we launched EF Capital is because people were asking us for it. We're really not that smart. So over the years, we've had people ask us many, many, many times, can I just give you the money or can I just buy one of these online businesses and you manage it for me? And the answer has always been like, no, that's a terrible idea. Get out of here. After hearing it often enough, we realized, okay, there's clearly a need here. Is there a solution that we can provide? Can we allow people to invest in these online businesses passively? So that's exactly why EF Capital was. So the first one, we already touched on. You need a specialized skill set to run these online businesses. The example that I like to share is, my mom wouldn't be able to buy an online business because she doesn't know how to, she wouldn't know how to run it. At the same time, my mom doesn't know anything about manufacturing cars, but she can own a share of Ford Motor Company and she can get exposure to, the automobile manufacturing sector. So that's really the goal here, is to make online businesses an accessible asset class for individual investors. If you want online business exposure, you can easily invest through EF Capital, build a diversified portfolio. So first of all, it's removing the required specialized skill set to run online businesses. Two, even if you have the skill set, maybe you don't have the time. Maybe you just had a big 7-figure exit. Maybe you just sold your business. You like the returns that online businesses can provide, but spending $100,000 and buying a business that requires a significant amount of your time might not move the needle. So this is a way to get exposure without spending the necessary time to run one of these online businesses. And then the other thing is it's an easy way to build a diversified portfolio. So instead of buying $100,000 business, you could buy many fractional pieces of different kinds of online businesses. So that's what we're doing on the investor side. And then on the operator side, like I mentioned before, we're pairing up these investors and operators. On the operator side, if you look at our industry, it's very, very difficult to get financing from traditional sources like banks. It's becoming a little bit easier, but it's still extremely difficult. So you have this big pool of experienced operators who have done this many times before, who have run these successful online businesses, who have started them, who have bought them and managed them, but they don't have access to capital. So we're solving both of those problems with the same solution there. We're giving experienced operators access to capital and leverage.
I love it, Matt. And what you said there too, like, we're not that smart. Our audience just kept asking us to do this. Like, there's like a couple of good lessons there. Like the Empire Flippers brokerage that we have now sold, I think is over $400 million worth of businesses. Like we started off selling our own sites, right? And we were blogging about it back in the day. And people kept asking us like, hey, could you just sell my site and I'll pay you a commission? And if I remember right, Justin and Joe were like, no, why would we do that? We could sell our own business and collect everything. Like, why would we go through all this effort for you? But then it just kept happening. And like, wait a second, these people have way better businesses than what we're building. Maybe we should sell these. And that was, the rest is history. That's how the brokerage really came about. So like, for the audience out there listening, if you're building out an audience yourself with your own business, listen to what they have to say because it can lead to some pretty big business opportunities. Like it revolutionized our business at the brokerage, right? The brokerage probably wouldn't even exist without our audience asking us to do that. And now EFC in a very similar way. So that's super cool. So how long has EFC been around now, Mike? Is it a little bit over a year?
Yeah, so UFC was launched publicly a year and a half ago, January of last year, January of 2021.
Excellent. And in that year or so, you've launched 3 rounds now for investors to deploy their capital with operators who are going out and acquiring several different businesses across multiple monetizations. So what have been the outcomes of those 3 rounds?
Good question. So we launched 3 rounds, raising total just under $20 million from individual investors. Across those 3 rounds, we've had 11 different investment funds. Round 1 has already had 2 full quarters of operational history. We've done distributions on 2 quarters. Our average cash on cash returns for each of those quarters has been 4 to 5.5%. I think our average is right around 4.5%. We're getting ready to pay out a 3rd quarter distributions next month as soon as June ends. So far, it's looking good. Our 2nd round, this will be once this quarter is done, once Q2 of 2022 is done, this will be the first full quarter of operational history. So we're getting ready to pay out our first distributions, our first dividends next month on round 2 as well. When we launched this, we projected north of 20% cash on cash investor returns. And so far, we're on track. If you factor in the profit from the exit, if things continue exactly as they are right now, we should be able to hit our goal. And then round 3 is still in the acquisitions phase. So the money has been raised, the operators started buying businesses, and they have about a month left to finish buying businesses. After that, we'll transfer over the businesses and they'll start running the businesses, making improvements, and we'll start paying out distributions to investors.
You mentioned exit. Did you mean exit from Empire Flippers as EFC goes off kind of on its own?
Yeah, good question. I should have clarified that. So typically when our operators buy businesses for these investment funds, they'll buy the business, they'll run it, and they'll pay out regular quarterly distributions, and then they'll sell the business at a certain point in time. Our expected hold period is around 3 years. And when they sell the business, investors can also realize a profit on any growth in the value of the business. So that's what I was alluding to.
Gotcha. I'm assuming no one has exited yet. Like that ballpark estimate is still holding true so far?
Yep, nobody's exited yet. We'll probably start seeing our first exit in maybe a year or 2 years, was probably more and more realistic. But so far on track, we're doing better than expected compared to our projections.
That's awesome, man. So when someone invests in these, and this is just to give more clarity to the audience, you mentioned paying out these distributions. So I think it's worth noting that if you invest in EFC, it's not like you get paid right away, right? Like there's a bit of a waiting time before those distributions happen. So maybe walk us through that process a little bit. Like what does that timeline look like?
Yeah, good question. So we don't have any investment deals available now, but I'll just walk you through a hypothetical example. So let's say we had a investment round for operators available today. We would be raising money from investors. Once you put your money in, a few things need to happen before you start receiving distributions, and that takes typically 9 to 12 months. So we would tell investors don't receive much in cash flow in the first year, pretty much expect to receive nothing or very little. At the end of that, And this is for many reasons. One, it takes time to make these acquisitions. It takes time for cash flows to catch up with income due to net 60 terms. Oftentimes, the operators are reinvesting cash in the first quarter to implement some initial growth, to front load growth. We need to wait for a full quarter. But if you add up all those things, it typically takes 9 to 12 months after you invest to start receiving distributions. After that, investors receive regular distributions quarterly. They receive a quarterly report and a quarterly payment. And the expected hold time is about 3 years. After 3 years, the operators will sell the business, and investors they will get their money back, and they will also receive part of the profits on any increase in value of these businesses. So if an operator is able to increase the bottom line significantly, they'll be able to sell the business for significantly more.
You mentioned a net 60. So maybe just a very brief explanation of what that is. And I assume that's because of the way Amazon FBA payouts work and maybe some affiliate networks as well.
Yeah, I mean, that's exactly it. If anybody listening is familiar with payment terms for other industries, it's the exact same thing. So in our industry, let's say you have a website monetized by Amazon affiliate or by, let's say, different type of affiliate. If I'm earning money today, I might not receive that money until 2 months from now, or a month from now, or 3 months from now, depending on whatever the payment terms are of the underlying monetization.
Gotcha. Yeah, that's what I assume, just for clarity for the audience there. So switching gears here from investors investing into EFC, if anyone's read my blog post Mike and I worked on together, you are already in the know that you guys are looking to actually split off from Empire Flippers and become your own entity. In a lot of ways, like your own business, maybe even changing the name of the company to move away a little bit from the EF branding. So, and this is kind of like the big, awesome thing about this episode, because we're actually going to be talking about this very soon, how investors, people listening to this right now, can actually invest into EFC itself. But before we talk about that, let's go into some of the reasoning that you have. Like, why are you guys looking to split off from Empire Flippers? Like, what is the goal there? What's the motivation?
Yeah, this is something that we're really excited about, our direct raise and allowing individual investors to participate. So let's take a step back and I guess talk about the history here briefly. When we launched EF Capital, when we were doing all the work, we needed to launch it about 2 years ago before we officially launched it a year and a half ago. We had zero track record. We had this idea. We had this demand from investors to own these businesses passively, but we had no track record of doing this. We knew that the only place that we could get capital from to fund our operations was Empire Flippers brokerage. So we took out a loan from Empire Flippers. EF Capital is a separate legal entity. We knew that that was important to set it up separately from the beginning, because really at the end of the day, it does have slightly different interests. So we created a separate legal entity. We took out a loan from Empire Flippers Brokerage to build a team that does the day-to-day work of EF Capital. And then we also received a whole bunch of shared resources from Empire Flippers. So Empire Flippers did a whole bunch of free work for EF Capital. Things like, Greg, you helped with a lot of this. Things like marketing. The marketing team helped us
welcome,
a lot.
Mike. Never forget that. Never forget.
I never will. I think you even wrote the original EF Capital investor information page. Yes. You and Justin. Yeah, so tons of help from EF, marketing, engineering, even the sales team. I think the sales team helped. Yeah, the sales team definitely helped on the first investor round as well, explaining how the program works to investors, accounting, HR. So we received all these free resources. We received this loan, which of course needs to be paid back one day. And as part of that, we promised to buy businesses from Empire Flippers exclusively, which was a nice win for us in the beginning as well. We knew that our operators were looking at, high quality businesses that had already been vetted, that we could rely on the numbers. But we knew that this was really a temporary solution, that once EF Capital grew big enough, it would have to start buying businesses outside of Empire Flippers. And we're at that point now. Our long-term goal is to deploy $100 million a year consistently per year and get there within the next 2 to 3 years. And in order to do that, we need to buy businesses everywhere. We need to expand our team and we need to scale up our processes. And now is the time to do so. And that's why we're doing a direct investment raise. So what that means is we're raising money for EF Capital, the company, not for operators to buy and run businesses. We're raising working capital for ourselves to grow EF Capital, to scale up our processes. And as part of that, we're splitting off from Empire Flippers. We're paying back our original loan, which is a small portion of the funds that are being raised, are being used for that. And we're building out our existing team.
Yeah.
That was my super long-winded answer. Does that answer the question?
Mike, as the director of marketing, I am a legend of being long-winded. Do not fear. It's fine.
I like it.
That was a good answer. So you mentioned the incentives, which I think for some of our audience, they might still not be clear. Well, how could EFC and Empire Flippers not have aligned incentives? And you can correct me if I'm wrong here, Mike, but the way I look at it is like the brokerage, like one of our main incentives is try to get sellers to sell their business for the highest possible valuation within reason, of course. We still want the buyers to get a good deal. But by you guys going off here and being able to buy outside of Empire Flippers, even with private deals, you have the better incentive for you guys, which is trying to get these valuable businesses for lower price for your investors, which ultimately should produce a higher ROI, right?
Yeah, I mean, that's exactly it. All other things being equal, assuming the business grows or declines at the same rate, if we buy it for a lower multiple, investors get a bigger return. So I think those two interests, at least on the surface, are opposed. The brokerage wants to get the highest multiple possible, and EF Capital wants to get the lowest multiple possible. And honestly, it's been a little awkward. We didn't think about this when we launched this. The EF Capital team that's doing the acquisitions is completely separate from Empire Flippers. But as a seller, if you see an offer from EF Capital, you might think like, wait, hold on a second here. I thought you guys were selling my business. Why are you guys buying my business? How can you represent both sides? And we obviously anticipated the conflict here, and the way we solved it is by making sure that the people that are doing the acquisitions, that they have zero access to any inside information. They can't see any of the seller communication. They don't receive any early access to anything. They're treated just like any other buyer. But because Empire Flippers is in the name of both, it's a hurdle that has to be overcome and that has to be explained every time.
It's a very awkward dance we've been doing with it for sure.
It is.
Yeah. So those are some of the incentives for the audience. So you guys out there listening in understand. And it is very awkward. But usually when it comes to like, okay, well, EF sells at the highest valuations. He's trying to buy at the lower valuations. Like the reality usually ends up somewhere in the middle is what I find. Because like, I think you'd probably agree with this, Mike. It's better to pay a premium valuation for a super high quality business than just trying to like, let me go dive into this dumpster for this really shaky site over here that may like work for a week, right? So it's usually somewhere in the middle.
100%. We're definitely willing to pay good multiples, even above market rate multiples for good, stable sites, that we have the opportunity to improve. So absolutely agree with that.
There's some very good buying advice out there for all of our listeners, especially if you're brand new. I'd always recommend buying quality over, something cheap when you're brand new, because that like solves a lot of problems. Because you're buying super cheap, you're probably going buying someone else's mistakes, and if you're brand new, that might be a real bad move. So yeah. Speaking about investing into EFC directly. So again, for clarity, this is investing into Empire Flippers Capital, the business, not one of your guys' deals with the operators. How much risk are investors looking at when they participate in this raise, in this capital raise you guys are doing? And also, what are the potential rewards that they might get by, deploying that capital into EFC proper?
Yeah, good question. So the short answer is it's a significant amount of risk. It's important to remember here that an investment in EF Capital is really an investment into a startup. At this point, EF Capital is not profitable. It's going to take us another couple of years to get to profitability, and that carries risk. This is why if you're investing into EF Capital, you should only put a small portion of your net worth into this investment. You could potentially lose all your money. If something goes wrong and EF Capital does not work out, you could lose all your money. And in order to invest, you need to be comfortable with that risk. And you only need to invest a small portion of your liquid net worth. At the same time, even though you're investing in a startup, you're not investing in a startup with just an idea. You're investing in a startup that has a proven concept, that has product market fit. We definitely didn't have that a year and a half ago. When we launched EF Capital a year and a half ago, we had zero track record. At this point, we have done all the things that we know that we need to do, like find successful operators, vet these operators, find investors that are interested in participating, make acquisitions, and deliver good returns to investors on these investment funds. And we've been able to execute in all four areas. So now what we're looking to do is raise capital and continue doing exactly what we've been doing at a larger scale. In terms of upside, the upside here is if we can execute on our strategy, on our business plan, we think investors could receive north of 30% investor internal rate of return. So north of 30% investor returns based on our base case financial model.
How does that compare with just directly investing into one of the EFC deals? You said 30% IRR. I mean, what does that look like on like an annual cash basis, like what you're judging the deals that EFC does?
Yes. So when we launched this, we wanted to make sure that there's a higher return on investing into EF Capital directly versus into the individual deals. So on individual deals, our projected rate of return is north of 20%, and the projected rate of return on investing into EF Capital directly is north of 30%. And the reason for that is if you think through it, when you're investing into these existing deals, you're investing into existing cash flows. With EF Capital, it's a different type of investment. One, it's completely illiquid. Most of the returns will come from a liquidity event like an exit in the future. So this will be a completely illiquid investment for the next 5 to 10 years. There may be some small distributions about 3 years down the line, but really most of it will be from the exit. So in terms of risk profile, it's a completely different type of investment. Like I said, it's much more illiquid, but it's also, one of the few, or really one of the very few ways I can think of to get direct exposure to this market, to be able to invest in an investment platform for the e-commerce market, for the online business market. There are many other types of investment platforms, but we're the first ones to do this with online businesses. So if you look at, there's many investment platforms for real estate. There's even some in art, which would have been awesome to invest in, before they received their massive billion-dollar valuations. This is a new investment platform taking a proven concept and applying it to online businesses.
So let's talk a bit about the numbers of the raise. One, how much capital are you actually looking to raise, and what valuation are you raising at?
Yeah, good question. We're looking to raise $4 million. This will be enough capital to take us to cash flow positive and allow us to scale up our team, our tech, our processes, everything to hit our goal of deploying $100 million a year. We're raising at a $34 million pre-money valuation. We're selling roughly 10% of the company. We're selling preferred equity, meaning investors get their money back first. And really important to point out, this is only open to accredited investors. So to qualify as an accredited investor, you need to have a million plus net worth or an annual income of 200,000 or more a year. And I'd imagine that most of the round, or most of the money that we're raising, will be allocated to previous investors. So people that have invested in round 1, 2, 3 of the operator deals. And same thing that we joked about earlier, this is, again, we're really not that smart. We've had our previous investors ask us, hey, are you guys ever planning to raise money for yourself to be able to grow faster? And we're like, no, why would we do that? Such a terrible idea. Like, get out of here with your terrible ideas. And then we've had a few people ask us this, and then we thought, like, okay, well, we could grow at the pace that we're growing, or we can raise some money and scale up much, much faster, really take advantage of this first mover opportunity here, first mover advantage, and grow the business. So that's exactly what we're doing.
I think it's so funny how, myopicness works with, everyone. Like, it's not just you or me. It's like pretty much all the entrepreneurs I meet have it in some case. But we're at EFC, you're basically raising money for these entrepreneurs to grow these businesses, right? Of course, they're paying distributions. But when it comes to you, like, nah, I would never do that. Wait a second, maybe I should do that. Maybe that is a smart idea.
It's that old Henry Ford thing, right? You can have your Model T in any color you want as long as it's black.
Yeah, exactly. So you mentioned that this is more illiquid than the EFC deals that you're doing, and the payout would come from a liquidity event like an exit. So before we move on and talk a little bit more how would you see the growth, let's talk about that. Like, what is the timeline here for potential liquidity event? And if that doesn't happen, like, let's say your timeline is like 5 to 10 years, and you could go into what that looks like. But let's say you guys decide to continue growing the company to even bigger heights for a longer timeline. What does that also mean for these investors?
Yeah, good question. So the projected investment time period on this thing is 5 to 10 years. And, compared to 3 years for these operator investment deals, compared to a range of 2 to 4 years for these operator investment deals, this is 5 to 10. So it's much, much longer. So you should only consider investing if you're okay with your money being tied up for 5 to 10 years and receiving very little in distributions during that 5 to 10 years. Now, it could be shorter, or it could be much longer, or it could be never. So it could be the time horizon could be much longer. It would most likely only be longer under a very good scenario. Let's say 4 years from now or 3 years from now, maybe even sooner, we get to deploying 100 million a year and we realize, wow, 100 million a year in cash deployed is not the ceiling at all. Let's go after 300 million a year in cash deployed. Let's not look to sell this business at the 5 year mark, because we could really triple the revenue and maybe even grow the bottom line more by spending the next 3 years growing. In that case, the investor ROI, the investor returns would be much better, but it would push out the liquidity. So instead of maybe selling at the 5 year mark, it could sell much later. So that's why we have a range of 5 to 10 years. There's no hard cutoff at 10 years. This could be a liquid investment a lot longer as well. And when we talk about liquidity event, we talk about most likely selling EF capital to somebody else. The most likely buyer would be somebody like a private equity firm. They have a number of things in their playbook to grow a business like this once it gets to the place where we think it will be in 5 to 10 years. Also, it could be something like a alternative asset manager that could plug in their existing investor base and receive, exposure to this market. And, there's a few other avenues to explore as well, but those are probably the two most likely ones.
Yeah, that makes sense. So you mentioned growth. You were raising $4 million to go into growth, but I'm curious in your thoughts at the moment on the current situation in the market, doom and gloom, kind of bit of everywhere. This sounds bad to say it this way, I think, but this actually might be a great opportunity for you guys buying these businesses if valuations do start, stumbling a little bit. So what does the current market look like? And by that, I mean, if valuations stumble, but the cash flows are staying the same, so multiples go down, but the cash flow is relatively the same. This could actually be a very good buying season for you guys. Or is that wrong? What are your thoughts on that?
No, I completely agree. I mean, like we said before, nobody knows what will happen with the economy, but there's a lot of money to be made even in bad economic environments. You could take market share from your competitors that are not as well run, that are doing poorly. There might be a great buying opportunities if multiples do take a temporary hit. We're doing everything that most companies should be doing in an economic downturn, which is focusing on becoming cash flow positive, which is focusing on the bottom line instead of just the top line. And exactly like you said, there might be some additional opportunity for us during an economic downturn. I mean, some of these assets have just gotten way out of control. I've got, we don't need to name it any specific ones, but yes, I mean, some things have definitely gotten way out of control. And honestly, it might be easier for us to raise money from investors in an environment like this, where it's like, hey, I know you've invested in this other stuff, which did well until it didn't, but would you like to invest into cash flow positive businesses? This is what EF Capital does.
Yeah, for sure. So let's talk a little bit about how you're looking to spend the 4 million. You've kind of hinted at it already. You kind of answered the question a bit, but is there anything specific levers that 4 million can really just turn things on to turbocharge, take you guys to the next level? Is there any specific plan of action?
Yeah, I mean, most of the money will be used to invest into our team. So just to do more of what we're doing now in order to be able to do it at a bigger scale. So we're going to hire more investment analysts to help us vet and find operators, vet their track records. We're going to build out our marketing team to attract new investors. We're going to hire new investment advisors that help explain how the program works. We're going to build out our acquisitions team, especially as we open this up to other brokerages outside of Empire Flippers. We will need to recreate some of the functionality in-house that we take for granted with Empire Flippers. So when we look at a business being sold at Empire Flippers and we look at the P&L, we can pretty much rely on the numbers in the P&L. Of course, we do our own final checks, but we have a good starting point. Unfortunately, that's not the case with every broker out there or even private deals. If a seller puts together his own P&L, pretty much have to rebuild it, not because they did anything wrong on purpose, just because, that's not what they do for a living. So we're really going to build out our acquisitions teams, our investment analysts to help operators make acquisitions everywhere. We're going to invest some money into our own platform. This will be taking the existing features that we have in the Empire Flippers platform, having that functionality as a starting point, and then improving our investor reporting. So existing investors can see what they're invested in. Like we talked about before, part of the money will be used to pay off the existing loan to Empire Flippers. And we're also going to put some of it aside as a working capital cash buffer, just so we have enough cash to make sure that if anything goes wrong, there's enough cash in the bank to take us to profitability, to cash flow positive.
So out of all the investors looking at possibly, getting into this deal, you already mentioned a few traits that they should have. One, like this is going to be locked up possibly 5 to 10 years with little to possibly no distribution, waiting for a liquidity event, though it can be much higher returns because of what EFC is doing versus just say going for the funds that you are creating within EFC. So is there any other traits that this investor should have? Like who is your perfect investor target audience, if you will, that would benefit the greatest by investing into EFC?
It's really somebody that has enough net worth or a big enough portfolio where they can take a small part of their net worth and invest into this. This is a completely passive investment. So the investors do not receive any board seats. They don't receive any voting rights. They will receive an annual report on how the business is doing, and they will receive, exposure to this asset class, to a investment platform opening up this asset class. So I would say passive investors who have enough net worth to put a small portion of their net worth into this investment, who are accredited. That's just a legal requirement. There's no way around that. They have to be accredited investors, even if they're non-American. So they have to meet the US definition of accredited if they're foreign investors. I think that sums it up pretty well.
Okay, so how do these investors, like say they're accredited, all of this sounds great. How do they actually go about to go and actually invest in EFC? Do they email you, or how does that process look like right now?
Just email Greg at empireflippers.com and he'll take care of it.
Hey, I know, like Mike just told me on this podcast how to do this, so email me. We'll figure it out.
I'm absolutely kidding. Please don't do that. That would not be fun for Greg.
Just email Mike and me, so we'll work together as partners on this.
Absolutely. Here's the cell phone number. Call anytime, day or night. No, and it's really simple to invest. You just go to empireflippers.com/capital. And then you click on the link that says EFC is raising money. That will take you to the information page, which explains a lot of the stuff that we've talked about. It has additional detail. It has the legal agreements. It has a recording of a investor presentation that we did that explains everything. If you have additional questions at that point, there will be a link where you can book a call with our investment advisors. They can answer all your questions, walk you through how everything works. If you're ready to invest, you just load up your Empire Flippers wallet and you click the invest button. And once you click invest, it moves money from your wallet. It'll ask you to sign documents, and it happens instantly. One thing I forgot to mention, the minimum investment is $50,000 per investor.
Oh, you stole my thunder, Mike. That was going to be my next question. How could you do this to me? I'm no longer accepting the CC'd emails because of this. Oh, cool. That all makes sense. It sounds simple enough. Very similar to the actual EFC process itself, if someone wants to invest in one of the funds as well. My final question for you is we already pretty much covered, what timeline investors are looking at to see a return on their investment. My final question for you before we move into more of the rapid fire around here is overall, like the grand arc of what you're seeing with your vision, what ripple effects do you think that this fractional online business investment opportunities like what you're doing will have on the online business industry at large? Like, what do you see down the road in those 5 to 10 years?
Yeah, good question. I think it will help bring additional maturity to the online business industry. I think it'll bring legitimacy into the online business industry as well. If it works really, really well, it might have effect on multiples as well. So if you think about it, the multiples that we talked about earlier, if an investor doesn't have to actively run these online businesses, I think they would be willing to accept a much smaller annual return. If they're willing to accept a smaller annual return, they're willing to pay a higher multiple to buy these businesses. So I think over the very long term, it might have that effect.
Gotcha. Yeah, it's going to be interesting to see what happens there. I think very similar to what Masterworks has done. I think what EFC can become is very similar in that vein, which would mature the market. I'm pretty excited to see. I think you're right. It's going to be very intriguing to see what happens. But now I need to ask you, are you ready for the rapid fire questions, Mike?
I don't know. Rapid fire sounds pretty scary, but let's see
It's
what happens.
extremely scary. I mean, it has the word fire.
It does. It does. Shouldn't yell fire in a crowded place, right?
The most intimidating word is rapid because I'm a very slow man. I like to move very slowly. So anyone that's moving fast freaks me out. So I'm with you, man. Are you ready to lock hands and go down this scary hallway together?
Let's do it.
Okay. So, real quick, rapid fire responses. What are the best hidden growth opportunities in your view with an online business today?
I think the answer is it depends, which is the most annoying answer ever.
The most
Anybody can
accurate
give.
answer anyone has ever given on this podcast.
I mean, I used to spend a lot of time working with buyers when I used to work for the brokerage, helping them find a good business. And I would get this question all the time, what's the hidden growth opportunity? What's the one thing that I could do to just crush it? And the answer is, well, it depends on what your skill set is. So what I would tell buyers is, let's say, you mentioned conversion rate optimization earlier. Let's say you're really good at conversion rate optimization. Look for businesses that could be significantly improved with conversion rate optimization. Look for affiliate sites that have a low, that can be approved with CRO. Let's say you're a master at logistics and cash flow management for e-commerce businesses. Well, look for Amazon FBA businesses that have been out of stock, 20% of the time over the last year. And I would say the flip side of that is, if you're not so great at logistics, don't buy Amazon FBA businesses that are struggling with logistics. So I would say look for things that you're good at that you can apply to the purchase.
Yeah, that makes total sense. What tools or resources can people use to help gauge or evaluate a business investment opportunity like digital business?
I would say the seller is probably one of your best resources. We do have acquisitions advisors that work with our operators, and we always tell them, make sure you spend enough time talking to the seller. Ask the seller enough questions to, one, understand all the work required to run this online business, both in terms of time and in terms of skill set, and also to help you understand the opportunity. If you have a idea on how to grow the business, ask the seller if they've ever tried that in the past. What has been their experience with that. So I would say definitely spend time talking to the seller to better understand the business. And, most sellers love talking about their business, so they'll be happy to talk to you.
Mike, I know EFC is splitting off from EF, but you could have said contact a seller advisor at Empire Flippers. Like, do I have to send you $200 to get I'm kidding. That is great.
That one was obvious, right? I thought we were looking for the hidden gems here.
That was the last question. Man, you're failing this rapid fire, Mike. We got one more opportunity here for you.
All right, let's do it.
By the way, I absolutely, in all seriousness, your advice there, 100% correct. The seller is usually the best resource, all joking aside. But then, speaking of joking, tell me, what has been the funniest moment you've had working in this industry for the last 6-8 years?
Ooh, 6-8 years. So let's do something more recent. So I'll give you a more recent example for EF Capital, maybe a year-ish ago, maybe a little more than a year ago. So one of the operators that we're raising money for, more than a year ago, was Dan. And his strategy was to buy established display advertising websites that have a longer track record, which in theory should have lower risk. So there might not be a massive opportunity to grow them. However, there is much less downside, and that was his strategy. And the way we described that strategy was Dan is looking to buy mature websites with blah, 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 blah. And I was talking to an investor more than a year ago. He scheduled a call with me to ask some questions, and we got on the call. And right at the beginning of the call, he said, hey, I don't have too many questions. I already invested in most of your deals. I just had a couple questions. So, I answered his questions. And then I looked him up and I noticed that he invested in like 6 out of 7 of the available deals. And I asked him, why didn't you invest in that other deal? You seem really like all the deals except this one. Why not this one? And he was being really cryptic. He basically said, it's just not for me. And I'm like, what do you mean it's not for you? Like low risk strategies are not for you compared to the other operators. He was like, there's nothing wrong with it. I just don't like mature websites, or like, I just don't want to invest with mature websites, but there's nothing wrong with them. Like, I just don't understand. And we kept going back and forth. And finally, something like 2 minutes later, he asks me, he's like, well, okay, let me ask you, mature, is it like soft core or what is it? And then something finally clicked in my head. And I was like, no, that's not what we meant by mature. We just meant, things that have been around longer with a longer established track record. So after that call, I don't remember if we ended up investing in that deal or not, but we definitely went back to all the pages and we did a find and replace on mature with established with a long track record.
That's so funny. On the listing pages, we'll often use well-aged for like an older business. And I've never really liked that term. I always wanted to replace it with mature because like that sounds better to me, but maybe I've dodged a bullet by not doing that. Like, whoa, yeah, you guys have a much different guideline for these sites now, huh? That is awesome. Well, tell us where people who are listening to this podcast right now can go and email you or contact you, and hopefully CC me on it as well.
Yeah, I would say for any questions on EFC, best place to reach us is EFC at empireflippers.com. And I'll see the emails. It'll get to our team as well. So this way you can get the fastest response possible.
Awesome. Well, it's been an absolute blast having you on and catching up, Mike. Looking forward to see what EFC does. I think the future looks very bright.
Awesome. Thanks for having me on, Greg. It's been a pleasure.
Yeah. And for everyone listening out there, if you have not yet done so, make sure you leave a 5-star review to let me know that you enjoy my first episode hosting this. Hopefully, I'm doing a good job filling in Sarah's shoes here. And with that, we're out. Talk to you later. There you have it, the interview with Mike and me. I hope you enjoyed it. I hope it got you inspired at all the different things that are happening in this industry. And remember, if you're an accredited investor and you want to own a piece of Empire Flippers Capital, you can go to empireflippers.com/capital and you can learn more and talk with Mike and his team and everything they're doing over there. And of course, if you just want to buy a highly profitable business, you can always go to empireflippers.com/marketplace. Or maybe you want to make an exit of your highly profitable business, and you could go to empireflippers.com/sell your site. I've been your host, Greg. If you enjoyed this episode, my Christianing episode here, make sure you leave a review, give us a like, a follow, share it across social media, and let's make Mike famous here together. Talk to you all soon. See you on the next episode.